Catzz Money Army. I have 4 easy steps to make profit on a quick swing trade. Check this out. For step number 1, go to tradingview.com. It's a free web browser version to analyze stocks. There's also a free iPhone and Android version as well. Step number 2, look for your favorite asset to trade. For this example, I will pick Litecoin, which is a cryptocurrency. Ticker is LTCUSD. And the reason why I pick Litecoin is because the cryptocurrency market never closes. Unlike the stock market, which opens from 9:30 a.m. to 4 o'clock p.m. And also Forex and commodities market opens about 23 hours a day, but they close during the holidays as well as weekends. So the main reason why I pick cryptocurrency is because it's open 24/7. All right, step number 3 on our trading view, there's a section here that tells you the interval display. So typically for most, I would say, investors, they probably look at the 1-day candlesticks. But for swing traders and day traders, they probably want to zoom in on 1 minute, 5 minutes, or even 15 minutes. But for the sake of this demo, I will be selecting 1 day. And I think 1 day has the highest probability of executing the strategy. So make sure that you selected 1 day candlestick interval, which means that 1 candlestick represents a single day pricing that occur. So for example, the candlestick that I've highlighted right here, on May 8th, it actually opened at $84.40. It went as high as $85.08. It went as low as $75.53. And it closed at $76.69. So that's what these candlesticks means. And if you just hovered your mouse cursor on these candlesticks towards the top, it will actually display the stats for each daily interval. Step number 4, our objective is to buy low and sell high with a profit target of at least 1 to 2%. And we're only going to execute the strategy based on certain conditions. The condition that we're looking for is regarding a red hammer candlestick. And we're looking for a red hammer because we're looking for something where the candlestick on a daily interval opened high, closed lower. So this is a good example where it appears that there were more sells than buy during this day. And that actually drove the stock price down to about $82.51 towards the bottom. But then throughout the day, it later came back and it went back up in price. And then it closed at $85.19. And it looks like the buyer shifted control during that time. So there's a really high probability that the next day candlestick will have more buyers in control and less sellers. And so that's actually the reason why the next candlesticks show green. So it opened lower at $85.04. It went as high as $88.02. So right here, this is a good area to take your profit, basically sell it out. But in some scenarios, it could also go up further. So I guess that depends on your profit and risk ratio. So if some of you are more adventurous, then, definitely let it ride longer. So even for the second candlesticks, it actually went higher. And then the one after that went even higher. So it went as high as $90.21. Now, I happened to make a trade on one of my demo accounts that executed the strategy, and I made some profit off it. So, whether it's a demo account or a live account, this same strategy works for any kind of brokerage that you're using, whether it's Robinhood, MetaTrader 5, Charles Schwab's, whatever brokerage you have right now. Now, let's look at some further red hammer candlesticks. So this one appears to be almost like a red hammer, because the wick towards the top is still lower than the bottom one. And it also opened higher. And then towards the day, it looks like it was bouncing back up. But it still closed lower than the open position. So, and again, over here, there's a really high likelihood of the next candlestick to go up even higher. So over the next course of 1, 2, 3, 4, 5 days, it went as high as $94.82 for Litecoin. Now, this is a good time to actually take your profit and then figure out the next strategy. So here is another example. On April 23rd, this is a good red hammer where the top part of the wick is really small compared to the bottom. So this is what I would call a true red hammer, where it opened higher and then closed lower, but throughout the day it looks like there were more sells, and then the buyers took over afterwards, and that formed the red hammer. And the reason why it's still red, because the closing of this daily interval was still less than the opening. So on April 23rd, it opened at $86.78, and it closed at $86. So that means there's a high chance of more buyers taking over for the next day. And so if you look at the next daily interval, it actually had like a really long green candlestick, about 2.31% increase. And if you look at the next candlesticks, it has a 3.61% increase. And this is another good exit sign too, where possibly when you're reaching the moving averages or close to it, this is the time for you to possibly sell it out. Or, even back here when you make your 1 or 2% profit, close it out here. So you basically want to get in and out as quick as possible. And, you also want to risk a decent amount. Now, for some of you that like to set up a stop loss, which makes sense. So you would probably want to set a stop loss around the low of $84.29. Now, for those of you swing traders that don't want to set stop loss, let it ride out. And eventually, if it drops back below what you purchased for, maybe if it goes below 1 or 2%, then you close it out. Stock market is like a war. You always want to make sure that you win the majority of battles. No one will have perfect records. Eventually, you will have those losses, but just keep it to the minimum. So that's one of my strategies as far as swing trading. 4 easy steps. Please do me a huge favor. Smash the fucking like button and subscribe. I would really appreciate it. Thank you so much.